Good Thursday morning and welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. I'm coming in hot today like always. We have some more bank earnings out. The Mag 7 trade may be on the verge of coming alive again thanks to one giant tech company that makes chips. And an interesting turn, Beyond Meat has entered the drink space. Go figure, with its stock now at only 96 cents. After years of struggles, Beyond has launched a protein-packed sparkling beverage. Like I always tell the Yahoo Finance team, every day is full of surprises. In the investing world, you never quite know what each day will hold, and I assure you, Beyond Meat taking aim at leaders Celsius and Red Bull wasn't on my bingo card on Monday morning. Here are three things I am pondering today. Taiwan Semiconductor is crushing it. The Mag 7 trade has been weak out of the gate this year, but if you've been bearish on these names, use Taiwan Semi as a fresh reality check. TSMC, as it goes by, said it expects CapEx of $52 billion to $56 billion this year, up at least a quarter from last year. It also sees revenue growth of close to 30% in 2026, faster than analysts forecast. If you can find a bearish nugget in this report, get at me on X at Brian Sozzi. I want to hear from you because I don't see any. If I like your point, I will personally mail you one of Beyond Meat's new sparkling drinks right to your home. The ghost of Trump tariffs reappears. President Trump has enacted a new 25% tariff on certain advanced computing chips, according to a White House fact sheet. That includes NVIDIA's H200 chip and AMD's M132-5X. However, chips imported to support building up the U.S. Tech supply chain are exempt. Bottom line, investors must not forget this year that the administration is proving very unpredictable on the policy front. So study policy risks on stocks you own carefully, or else. Now we know where all JP Morgan's investment banking business went in the fourth quarter. Went to Goldman Sachs and Morgan Stanley. Big fourth quarters from each on iBanking, which was in stark contrast to what we heard from JPM earlier in the week, with results under pressure and below their plan. Goldman's investment banking fees surged 25% in the fourth quarter. Investment banking revenue at Morgan Stanley surged 47%. JPM's investment banking revenue dropped 2% in the fourth quarter. Here on the Opening Big Roundtable, Victoria Fernandez, Crossmark Global Investments Chief Market Strategist, alongside Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Victoria, always nice to see you. Got to start on these bank stocks here. In terms of, now that we've gotten all of these results, what's the best one to own and why in your view?
Yeah, well, when you're looking at these really across the board, you have this mixed bag. You've gone through some of the elements of them. Goldman and Morgan Stanley really kind of nailed it this morning, especially with that investment banking like you were talking about. But they are your more expensive names within that sector. So you're looking at a price to book of around 2.5 times for those. When you look at some of the other names like a Bank of America, a Citigroup, a Wells Fargo, you're sub 2% price to book, and they had some really good earnings. So even though JP Morgan typically is kind of your gold standard here, the price has gotten pretty high, the valuations on those. We love these names. We have them all in our portfolio. But I think if you're looking to do an entry point as some of the prices have come down, I would look at some of these with lower valuations that have strong balance sheets. So maybe Bank of America might be one that you take a look at, or even Citi. I think those are good opportunities. There's good opportunity for them to move higher and for their balance sheets to continue to improve. And we think the yield curve is going to continue to steepen throughout 2026 for lots of reasons, right? Fed cutting rates, term premiums going higher, global yields pushing higher, growth opportunities. So we do think financials are a good place to be. I would look at some of those lower valuations, a Bank of America or Citi. Inez
Ferre, I'm going to prevent myself from asking you about commodities here. I know I'm always asking about gold and silver. Yesterday, Inez, I asked you about tin. I think people are sleeping on Morgan Stanley. I think new CEO Ted Pick at Morgan Stanley is getting the job done. You're seeing in the trading business, you're seeing in investment banking, you're seeing on the top and bottom lines.
Yeah, that's right. In Morgan Stanley, it's debt underwriting soaring 93%. So that's significant. And just as you were talking about, these bank earnings today really sort of in contrast with some of the other ones that we heard. Goldman, its highest level ever in equity trading fees, M&A advisory business, that soared 41%. I did note also something interesting that actually Bloomberg had picked up in their presentation, them talking about momentum to accelerate in 2026, activating a flywheel of activity, with flywheel being that buzzword that we may be hearing more and more about this year. But these stocks near record highs, certainly the outperformers among the banking stocks.
Brooke, it has been interesting to watch the stock market reaction to these various bank results. I think the stock that's going to get dinged or got dinged this week, it's JP Morgan, but no real major swings up, I would say, despite some very large beats by this group.
Yeah, Brian, I've been looking at the YF Interactive all morning long because over the past year, this entire banking sector has remained in the green. And it's interesting to see how sort of the reaction to these banking earnings was really kick off the key results here. Well, they've ultimately had this run up over the past year, and now in the past few days alone, we have seen some rotation out. JP Morgan, Citi, Bank of America, Wells Fargo moving lower over the past 5 days. And if you take a look at intraday trading, what's moving the most here this morning, Morgan Stanley up more than 3.5% at the open, Citigroup up to 2.5%, and then we have others like Deutsche Bank and Wells Fargo trying to hold on to some momentum, as well as UBS. But certainly what we've been seeing even year to date is this rotation into some of the names like Goldman Sachs, like Morgan Stanley, and UBS, Deutsche Bank year to date, holding on to some momentum so far. But really a mixed picture here to start off this year's trading session, and more so, more in the green to kick off today's trading session alone.
Victoria, what made me chuckle a bit is how badly Goldman Sachs managed this Apple Card business. I mean, they took almost a $3 billion write-down in the quarter. Now JP Morgan gets that business. How the hell do you screw up an Apple Card business? Everybody uses Apple Cards.
Yeah, it's true. I mean, it is kind of surprising that they were able to, like you said, mess that up the way that they did. But hey, it's an opportunity for JP Morgan. We saw the write down. It's why they missed on their earnings number. Take that out, and they beat on both top and bottom line. So it's an opportunity. And when we look at companies, one of the first things we look at is the management component. And JP Morgan is top of the line with that. So I think they're going to take this opportunity, really make it worthwhile for their business, help it be very additive to their earnings as they go forward. But like you said, everyone uses it. I can't think of anyone that doesn't pay with Apple Pay at some point in time and use these Apple cards. So I think it'll be a good opportunity for JP Morgan. Another reason they continue to be one of the leaders in this space. All
right, from banks to tech, Victoria, I'm going to stick with you here. TSMC, big quarter, big guidance. Shouldn't this quarter just put to bed the weakness we're seeing in Mag 7 out of the gate this year?
You know, it's funny, the questions that have been surrounding the whole AI boom. I think this earnings report really more than anything supports the idea that it's going to continue to move forward. And so, yes, it should support some of the Mag 7 names. You saw the support already for the suppliers for TSMC. So we look at ASML, we look at Applied Materials, Lam Research, all of those stocks up in pre-trading because of such strong earnings that we saw here. So I think what it does is this rotation that we have been seeing out of tech, out of Mag 7, especially out of software and tech, into other areas of the market. Maybe that starts to slow down a little bit as people say, wait a minute, perhaps there are more legs to this than what we were thinking, or they start looking at other components within the AI sector. Like I said, maybe some of the supplier names versus some of the Mag 7, but I do think it gives that whole sector a little bit more support, especially when you've got them saying CapEx is going higher, their profit margins are going to go higher. Sales are up 20%. Lots of good news here for the AI story.
Brooke, Victoria makes up a very good point. TSMC lifting the chip space, but also a lot of the suppliers too.
That's right. And what we're hearing is some of their customers, NVIDIA, Apple, Qualcomm, Broadcom, AMD as well. And I think to Victoria's point is they sort of solidified their position or their thoughts on where exactly this market is going in the near term. And actually on their call, what they had said, the CEO saying that they talked to several cloud service providers. They show me the evidence that the AI really does help their business. And that sort of solidified what they said was this lack of risk. They said they double checked their financial status. They're very rich. And that sounds much better for the TSMC story. And I think this really just goes to show that this sort of, came in as a vote of confidence for this AI momentum. This came in as a suppressant sort of to that investor fear that we've seen about that AI bubble risk. And certainly that message from the CEO on the call is why we're seeing these others move higher this morning as well.
I've said this before, Inez, I still think TSMC needs a better corporate logo. They got to update it for this AI era. But look, Inez, now we know why Jensen was wearing that alligator black leather coat at CES. He knew this TSMC quarter was going to be big, and he's probably sitting on a big quarter too.
Yeah, 100%. And look, just taking a look at what some of the Wall Street commentary on this is like, they're looking at that CapEx outlook and saying that this shows that the AI cycle is accelerating. You've got Wedbush that is saying that a beat across the board, gross margins, a major positive surprise there, and also that this company is really firing on all cylinders. That competitively, it is the leader here. And you've got Susquehanna saying something similar. That their position is unmatched. And if you take a look at also what the street is looking at for the stock, they're looking at an average of 382 for the stock, 29 buys, 2 holds. So it speaks to momentum in the industry, in the AI industry, as Brooke was just mentioning, but also for the leadership of TSMC.
Victoria, last word to you here. I've been tracking these tariffs that have been weighing on the likes of NVIDIA and AMD here. How concerned should investors be about this ongoing unpredictability by the administration? And how do you even go about pricing that in?
Yeah, it's difficult to price in things that you don't know. And that's part of what this is. You just don't know from day to day what announcement you're going to get. However, I do think in regards to this 25% tariffs, we knew that when the administration approved the sale of chips to China, there was going to be some kind of payback to come along with that. So I don't think it's a huge surprise that we saw this come through. I think the silver lining in this is that there are so many carve-outs to this, as you mentioned a little bit earlier, in regards to if it has to do with data centers and startups and public consumption, if it's, for nonprofit, all these different elements get carved out of this. And Howard Lutnick even has the ability, according to the proclamation, that he can add more carve-outs to this going forward. So yes, I think, NVIDIA is aware that they're going to have this. They're probably expecting to have this. They're still happy that they can sell to China, so they're willing to take this. But you just never know what's coming down the pike. To price that in, I think you just have to be a little conservative in your allocations, maybe not overweight some of these names until we have a better feel of what's coming down the pike.
All right, Victoria, Brooke, and Inez, stick with me. Lots more to come here. There is one big tech stock doing absolutely horribly some 15 days into the year. More on this one next. Not even a tighter relationship between Salesforce co-founder and CEO Mark Benioff with the Trump administration is helping to arrest an ongoing slide in the tech giant stock. This is getting straight up ugly for CRM. Shares of Salesforce have plunged about 10% year to date as fears about the likes of OpenAI's ChatGPT crushing software companies continue to drive negative investor sentiment. Stock is the worst performing member of the Dow Jones Industrial Average. This following a year where the stock sucked major wind and badly lagged the Mag 7. Activist investor Jeff Smith of Starboard Value, which increased his position in Salesforce last year, told me at Yahoo Finance Invest he is keeping the faith.
Salesforce is great. Terrific company. I think they're going to be an AI beneficiary. The performance has been much better from the beginning of our engagement to now. The multiple has come down. So it's not an execution issue. It's, as you mentioned, software in general has been more under pressure, especially value software, which are companies that aren't growing 20+%. They're growing double digits, but it's not as high as other people would want.
That said, is it time to try and pick the bottom in Salesforce? Let's take it to the opening bid roundtable. Victoria Fernandez, Brooke DePalma, and Inez Ferre. Victoria, coming to you here. So Salesforce, it's a company still growing, top and bottom lines. They came out reasonable guidance in December. Is the street badly mispricing this stock here?
Yeah, well, in your clip, they just talked about the valuations, and you're looking at around 19, 20 times forward earnings. So we've seen that come down pretty significantly. And I think they're right in the sense that the company is not a bad company. They have good, strong balance sheets. Cash flow is good. They're the leader in the CRM business. It's more a question of how are they going to address the need for their software with AI. So, they just had their new version of Slackbot come out this week, and the stock was down 6% on that news. So there's this divergence going on really between the innovative component on the product side and the stock performance. And I think they have to find a way to bring those back together. It's not just Salesforce, it's really the whole software sector. Equal weight software is way underperforming equal weight tech as a whole. So, what are they going to do in order to use AI to the fullest where people still need them and they're not replacing them? And I think that's the key. If they can figure that out, then this company continues to do great going forward. I'm not ready to just completely throw in the towel. I want to see what Mark Benioff can continue to do. Great leadership there, great minds at work. I think they'll figure something out, but it is taking a little bit of time. And if it's in your portfolio, you've taken a little bit of hit on it.
And Brooke, it's not just the Salesforce thing. I know I'm highlighting them as my stock of the day, but Adobe's under pressure, Snowflake's under pressure. I mean, the pressure we're seeing in Salesforce has essentially spread throughout the whole space.
And as Victoria just alluded to, we're seeing a rotation out of software stocks year to date. Salesforce is one of the biggest losers, down about 11% year to date. You can see on the YF Interactive, Okta got a recent upgrade from Stephens. We also have IBM set to come out with their earnings on January 28th, gaining some momentum. And that's really it, as well as Palo Alto seeing some momentum. Electronic Arts trying to hold on to that. But we're seeing across the board this sell-off as we begin and kick off this year, with Adobe one of the biggest losers as well. Salesforce sitting sort of towards the laggards, as you can see on this screen. And if you take a look over the last few years, there was a time where Salesforce did cross that 350 threshold, but really over the past few months, this company has certainly taken a hit. Within the last month alone, we've seen downward momentum, down about 7%. And if you take a look at the past few months, take a look over the past 3 months, we have seen the stock really hovering around this 240 to 225 sort of stock price. And this is really where we've seen these software stocks sit, especially over the past year. Salesforce has certainly taken one of the biggest hits, down, as you can see over here, down nearly 27%, with Adobe just following that.
All right, a big thanks to my opening bid roundtable, Victoria, Brooke, and Inez. Appreciate it. All right, Senate Banking Chair Tim Scott is abandoning plans to hold a vote today on landmark cryptocurrency legislation, that a byproduct of the biggest name in the industry speaking out against the legislation after months of working to help craft it. Coinbase co-founder and CEO Brian Armstrong taking to X, saying the legislation would effectively ban tokenized equities and would offer draft amendments that would kill rewards on stablecoins. Said Armstrong, we'd rather have no bill than a bad bill. Hopefully we can all get to a better draft. Matt Hougan, Bitwise Asset Management CIO, is here. Matt, good to see you. How much of a roadblock is this for the crypto industry?
It's a significant setback. I think the crypto industry was really hoping that we would get this bill. I think it's still hoping that we would get this bill. We said at the beginning of the year that passage of this bill would mean that Ethereum and Solana would trade to new all-time highs. If it's now uncertain, and it looks a bit uncertain, I think the outlook is a bit uncertain. There's still hope. There's still reasons both to expect this bill and to expect a good year for crypto. But be sure, this is a setback.
Matt, I'm going to assume this gets done, whether it's in a couple days, a couple weeks, that this gets done. What happens after this legislation passed? What should investors know?
Yeah, what this does, and I'm with you that it will get done. The old saying is that bills have to die 7 times in Washington before they pass. This is, I think, its third death. So let's be optimistic. If it does pass, it creates a firm regulatory framework that will last for years. Right now, crypto has done well over the last, let's say, 2 years because we've been in a positive regulatory swing. Washington has been in favor of crypto, but that could switch with a new administration. What this bill does fundamentally is make it so that that won't switch. So crypto has a strong foundation to build on. There are lots of specifics to it, but that's the big one. Do we have a big, strong foundation for which we can build a new financial industry?
I loved your 2026 predictions you sent along. I want to go through a couple of them. One, more than 100 crypto-linked ETFs will launch in the US. How will that change the ETF industry? And how should investors, assuming even half of these launch, even 10 of them launch, how do you go about investing in one of them? What do you need to look for?
Yeah, well, it's like the rest of the ETF industry, which has thousands of ETFs, but most of your money are in a few. Most investors will be best served by diversified crypto index funds. We run one, BITW at Bitwise, that gives broad-based exposure. But what you'll see out of these ETFs is a lot of individual asset ETFs launching on exciting new assets. We just launched one on Chainlink. A lot of thematic ETFs that give exposure to stable coins, tokenization, AI, and other themes. I think the right framework is the traditional ETF industry. Most of your money in a diversified index fund, and then use these exciting new launches to nibble around the edges and indeed ignore some of the more far off, unusual ones.
I wanted to leave a little time for this one. Another prediction you have is Bitcoin will be less volatile than NVIDIA. Now, when I think NVIDIA, Matt, to be fair, I think about strong free cash flow, strong earnings reports. I know what they're doing. I mean, Bitcoin, despite all of its advances, I mean, the industry is still, it's opaque and it's tough for people to understand. Why do you think this is going to happen?
Well, here's the incredible thing. We are sort of gifting ourselves a prediction here because last year, Bitcoin was about as volatile as NVIDIA. One of the things I love to do when I speak with institutional investors about Bitcoin is update their priors. People think of it as this wild and crazy market. How could you put it in a portfolio? Actually, for the last year or so, it's been about as volatile as the average tech stock. This is not your grandfather's Bitcoin. It's now a mature institutional asset, still with a lot of upside, but a lot less volatility. We just think what's been happening for the past few years is going to continue this year as institutions leg into this trade, which is what we're seeing to start the year.
One more, Matt, before I let you go here. Bitcoin's correlation with stocks will fall. Why?
Yeah, absolutely. Well, just think of everything that's impacting the stock market. Concerns about the AI bubble, invasions of Venezuela, sort of government policy. You have a lot of things that are impacting the stock market that don't impact Bitcoin. It's being driven by other factors. It's being driven by fiscal debasement. It has this huge institutional investment going on. They're just being driven by different things. And as Bitcoin matures, it's going to increasingly act like its own thing, not like a risk-on asset, but as a unique asset that fits into portfolios and makes the whole portfolio perform better.
All right, Matt, thanks so much. Good to see you. Have a great rest of the week. Appreciate it.
Thanks for having me.
All right, and for those of you who caught my show open, I dropped a review of Beyond Meat's new energy drink on my Instagram page this morning. You can watch that at Brian Sozzi. Hit me with some feedback. I'm curious to hear if you think Beyond has a shot at being a big drinks player. Are they the next Celsius, the next Coca-Cola, the next hot stock? Who knows? Julie Hyman has you next on Market Catalyst.